All right, welcome back to a brand new price action study or diary, right? So today is Tuesday, November 14th. And real quick before we get into this, I just want to hold myself accountable for first picking highs, but secondly, just being an absolute, pussy yesterday. I didn't want to test breakers and I didn't want to test goddamn mitigation blocks, and I attributed that to being quote unquote tired. All right, so nonetheless, here I'm gonna go ahead and look at price action and see what it's doing, and I understand we had CPI today. So here we are. This is our institutional chart. Okay, yes, it is. So here's what I'm looking at. Ultimately, I'm expecting higher prices. Now, I know I've been saying lower prices, and the reason why is I've been picking highs, I've been focused on this range here, and so it's time to switch gears. Now, I was stopped out of my trade, which was the return to this order block here, the last up close before the down move, and of course now we've traded past that and past the high, and so that's not a bad thing. I'm not, I mean, losing is realistically a part of this, but again, it comes from the idea of picking a high, saying, this is the last order block, when clearly on a higher time frame, aka the monthly, we do have an order block above that. Now, we did see price trade exactly to EQ here and then reject off of that. So we'll see what price wants to do, but we do have these relative equal highs right here, and I'm going to refine that here on a lower time frame. But just know on the monthly, we're expecting higher prices for NQ as well as for ES. On NQ, it's a little bit of a different story. We have traded above this, and we are currently in the weekly order block. So there's really no other objectives for me to frame other than this weekly order block and of course an untested high. Okay, so here we are, and that's a little more refined. We can see the low of the order block, last up close before the down move. We've retraded that, so we may see some reaction, and then of course we have multiple different sell side objectives, but I'm not going to pick highs. Like, the biggest takeaway here is to wait for price to trade above those relative equal highs. If fresh trades above those relative equal highs here, that could be a false breakout or turtle soup short. All right. And again, for bias on the higher time frames, which is really what we're refining here, expecting price to trade to the monthly order block, and then as far as here, it can also trade to this untested monthly high as well. That's all that needs to be said there. Let's go down to our higher time frame chart, and then we'll begin with that same logic, framing the idea of, are we seeing higher prices, or why would we see higher prices? Sorry, excuse me. Okay. Bert in your ear. My bad, my bad. All right. So here we are, and here's the price action that we've currently seen. So we have these relative equal lows, and yes, this is inside our monthly range, but this is actually external liquidity here. So we traded to that, and then smart money accumulated new longs here below this low to push price all the way above these relative equal highs, which we took today during CPI. We also have this void here, but bear in mind we have these relative equal highs, which price is currently trading through on the NASDAQ, and then we have this untested weekly high as well as with the monthly. Now, additionally here, let's go and frame that idea on ES for the daily. Same idea, right? We have that stop rate, but on ES, we also have a volume imbalance above us. So we have relative equal highs above us. We have this volume imbalance above us, which is the reason I put this target here, and that's where I'm expecting price to go to. Keep in mind as well, this is all still below the untested monthly high, and so we have this untested high as well. This is a consolidation before the down move, so we've already returned to this order block here, but just the low of it, I'm expecting a more aggressive run, for that order block. See if we see some sort of accumulation or even some reason to be expecting lower prices, because again, the biggest issue here is looking at this price action, even just if we don't count today, looking at before, we've seen higher prices. The idea was simply framed around the idea of this order block. In fact, we returned to it, and that doesn't really make sense because we still have these relative equal highs up here. We still have that liquidity void up here, and if I would have put in more effort, I would have known that before even placing a trade. Now I'm not going to reset my demo account. I'm going to take it and I'm going to learn how to manage loss. And one thing I will say is with that entry, even though I can know in hindsight that it didn't work out, I have no shame towards it, because you know what? I felt confident as fuck that price was going to drive to where I wanted it to go. And, I'm still learning. So I'm giving myself the benefit of the doubt. But framing, this untested high, all right, framing this fair value gap or liquidity void as well, the gap in fair value, we can expect the market to return to a fair value. This would be a good place for the market to sell off, especially because it's above relative equal highs. Price seems to be aggressively driving towards that level, but we'll see what it wants to do here. The reason why this would be low probability here on the daily time frame is we've already rebalanced this entire leg. We then traded above these highs, which would be supporting price, and then this would actually be a break in structure trading above this high, because in a bearish structure we would not see that. We would not see price trade above that order block. So now we know that the market is currently it's a bullish market. So that would be, boom, these highs, that volume imbalance, these untested highs, still with our monthly idea, still below the untested monthly high. Is it the same for NQ? Again, very similar idea, but the idea here is a little bit different. So we have these the untested monthly high. By the way, yes, there is some above here, but those are just the actual wicks. This is the body. All right, so we are still below that. Now, it's possible that price could want to go for that, but bear in mind we have taken these stops recently. All right, and even we've seen this really just aggressive movement to the upside. That means there's large players below here and below these relative equal lows here, below these relative equal lows here. And so they accumulate their long positions down here, so they're going to look to get out of their positions in the external liquidity. So we have this stop rate here. It's potential that we would see it go lower from here, but again, there's no reason for us to think that, because we do still have these multiple highs, and this is not an indication that price is going to go lower just because it's been going higher. For the 4 hour, okay, it's the same idea, of course, just refined. Level of sell side taken, all right, and then boom, we have the stop rate today. CPI pushes price above this high, okay, and additionally pushes price to clear out these highs, just barely, but more refined on a lower time frame. We do still have those weekly highs intact. All right, for ES, what are you thinking here? Well, currently we're returning to rebalance this liquidity void right here, all right, which was inefficiently traded. But additionally here, okay, we have these now relative equal highs with the volume imbalance that I mentioned, these untested highs as well, which is the reason I'm expecting higher prices overall. Let's go ahead and take a look at the weekly range and see overall what price has been doing. So the week before last, okay, which would have been the last week of October, we had aggressive movement to the upside, which has been noted. But that aggressive movement to the upside was rebalancing this previous price leg. And then last week wanted to create relative equal highs, so it wanted to accumulate orders on both sides of the market. At the end of the week, that liquidity was taken. Our low was created on Thursday and our high was created on Friday. It's a little bit different for the both of them in the sense that this actually showed weakness. So NQ was actually tipping our hand to the fact that we were going to see higher prices. Well, this was actually showing manipulation in the form of trading below an old low and accumulating more long positions. And of course, after that, we see price blast off. Whereas this said, nope, I'm not going lower. I'm not taking out those lows. I'm going higher. Okay. Then we, of course, went, for those stops. So we traded for those higher time frame objectives. All right. So very last thing, let's go down to the lower time frame. And now I'm going to stop being a pussy. I'm going to try my best to look for mitigation and breaker blocks. And I'm going to understand that I don't, I was so flustered because I was just trying my best. I thought I understood everything. I watched the video. I watched it again today to help deepen my understanding. Man, I was just so flustered and thinking I would understand it all. He's going to go through it in the core content even more. But anyways, I'm just rambling, man. Listen, here we go. Monday, we consolidated. All right. And initially, okay, here is the New York open, New York midnight. We trade below it. here, okay, trade below all these lows, and we take that level of sell side. All right, if we would have been a buyer here, then boom, it does rally above that level of buy side. So taking out sell stops, then taking out buy side. This morning, we also had a consolidation from the open price. Price does trade lower before we have this aggressive rally, and this candle, again, is a 15-minute candle. So that's CPI. And so that's another flaw, of course, with the actual logic of the trade, or at least in the sense that CPI was able to push price above that order block, and I, in the back of my mind, knew that we're going to have this high impact news driver. I might get knocked out, and so I just didn't listen to my intuition. All right. And again, we have multiple ideas to frame on a higher time frame. So it's the very same thing here. We're just focusing on where price came from. All right. If price does, trade down tomorrow, it will only trade to that order block. If it trades any lower, like if it trades lower than this consolidation and it breaks below an old low, then we would look for a return to that low, because we are at a institutional support level, or we're at an institutional level of support, which was framed. I mean, you saw me frame it on the higher time frame. We're at that order block, okay? And it's the same thing here for NQ. All right, these markets move the exact same. So that in mind, all right, now let's go ahead and refine the idea. So one thing I was doing here, and let me go, let's just do it simply. So ICT, he originally used the 1 hour, and he did something that really confused me, which was just the fact, and that's why I was so flustered to say too. So he looked at like a consolidation like this, and it's not necessarily refined. Like it literally just looked like a consolidation, at least to me. Like that's how I saw it. And so I just see a consolidation. I see him then look at it, and I just frankly didn't understand. Okay, but we're gonna understand that for each high that we're about to look at, all right, we're looking at a market structure shift, because obviously in hindsight you can see prices repel lower. We would be looking for this kind of thing at a institutional reference point, such as where we are now. So let's go ahead and look here. All right. So we have this low, all right, and we're on the 1 hour. All right. So from here, this is Thursday in July. Just some random Thursday. I literally just scrolled through price action. So we have people buying here. All right. And then after price reaches its liquidity or objective level, it aggressively sells off. Okay. And so price returns back to that last candle to allow traders to mitigate their loss, because keep in mind, everyone that was buying here would have been in deep drawdown here. So smart money can now liquidate their positions and build in short positions for the oppositional side of the market. We do have these relative lows here, and we also trade just below with the wicks. The wicks do the damage below these lows here and here. Okay. Now for the mitigation block, he says forms like a step ladder, and so it continuously repeats. Now he didn't say that it has to when we see this, that like it has to be instantaneously. There's no real time frame to it, but it's the same thing here. Okay, so we have this one up close candle, all right, and we also have this right here, so just trading up. All right, and then eventually we see a aggressive break below that low. All right, people probably still believing that this is just a retracement, price going to continue higher. All right, we see that break below that low, and then we return to it later on, and not higher than that previous high. Okay, so let's find a new example, because I really want to find one of the ones that just continuously repeats. Oh, and also one thing I want to mention too, part of it is this failure swing. It's higher high with the lower high to the right. Okay, I'm going to go down onto a 30-minute and look for some price action and find that even more. We'll look at here. Oh, God, I really hate this sample. Okay, you know what? I'm going to power through. I'm going to look at it because we're on a lower time frame. And so we have this new week opening gap. So this has not been traded to, but we can anticipate price to trade here level later. I'm gonna just mark that smaller. All right, but ideally, let's see if we can meet the criteria here. Okay. So what I'm seeing here is we have let's see. So we have this low form, and then we see these higher lows. Okay. Now here would be, I guess, the mid or halfway point between those two lows, and price does trade back to it here. Again, the reason I don't like this price action is really just because I don't understand it. I don't understand what it's doing with the new week opening gap, and with this consolidation here, it just doesn't make a whole lot of sense to me. All right, but let's go ahead and look here instead, actually. So this is more or less what I'm looking for, okay? So short-term rally, okay, above this high, and so we take the buy stops here, okay? Then afterwards we have displacement below this low, okay, and we trade back in to the aggressive range here, or we trade back to this would be a breaker, okay, in the sense that it broke down, so it's a market structure shift, and then returns to that right here, to that exact level, and it's actually just the wicks, and then we see price sell off. All right, I still want to seek more mitigation blocks because I don't feel like I have a great understanding of that still. Mitigation blocks are the one I'm struggling with. The breaker, that's really not shit. I'm not gonna lie, that's pretty easy. Pretty easy to understand. Not that the mitigation block isn't either. Okay, there we go. Here's something more juicy to look at. Okay. Okay. So there we go. Now I get it. Now I get it. Okay, listen. We have this complete downward price action. So we have people selling here. Now, after price creates this low or trades this institutional reference point, whatever it may be, we have this rally higher. So now everyone that sold here is in drawdown. And so price then returns back to it to allow smart money to build in their net long positions to move price higher. And we do show that here. It doesn't actually ever trade to that low until later on. Creates this relatively below, goes for sell side, and then we see it again, continue higher. All right, so that's the idea of the mitigation block. Now, see, we'll use the actual bodies. All right, same thing here. So, this looks like price is going lower, right? We have this candle here, obviously displacement. All right, and this is around 9 a.m. So, ultimately, we have displacement above that high. And so everyone that sold here is now in the negative, okay? And so price is going to look to trade back to that level or trade back to that mitigation loss. So that way, large, smart money entities can build in their net long positions. And that's what he means, when it repeats. We have these short-term rallies above an old high, all right, and then it returns back into that range, and it repeats over and over. Okay, now let's look for it on the bearish side of things. Let's see it repeat on the bearish side. People buying here. Price aggressively trades below that low. Boom. We then see a rally back to that. You didn't say how long it had to be. We see a rally back to that. Okay. We have this consolidation. So we'll say this is the low. Not really sure about the gap. Okay. We'll actually just move to this low since it's about the same. Okay. We have this low form here. So we then show that displacement. When that displacement happens, we're seeing we've already seen the shift in market structure. Okay, it hit this level, an aggressive movement. All right, but this is now the lower high because we want to see essentially weakness, right? So buyers or people who are buying here are now trapped in their position as price aggressively trades lower. And so this would be the mitigation block. Now, price doesn't actually, let's go on to a 15 minute. See if that's. Oh, I messed it up. Well, listen, I don't remember where that price action sample was, but it's the same idea. Okay, we'll go here. Let's just do it here, real fast. Okay, so we see price break below this low, so we're at a institutional level where we would be anticipating price to move in the other direction, and we wouldn't know it obviously because we're looking in hindsight. But let's just take this low. So here we go, low. We see that break in structure. Okay, we don't chase price. We focus on this now. All right, and we specifically would be focusing on this low and price actually returning back to that. And as you can see, does here. Now the low I mentioned isn't really that precise. It'd be more like the lowest low, right? But here it's the same thing. People are buying this, buying all here. Okay, look at this previous low, displacement below it, price again trades back here. It's a mitigation block. Now let's focus more on a breaker. So we have price continuing to trade lower, lower, and lower. Lower prices, lower prices, lower prices. Okay. We then have this low form. Price trades aggressively through it. And then afterwards, we see price rally higher, taking this level of buy side and taking this level of buy side. Afterwards, that's displacement above a high. So that is the shift in market structure. And afterwards, everyone who sold here is now currently, in the deep end, or they are negative. So price trades back down here. It also creates buyers for more. And again, this is the same thing that repeats over and over and over. What I actually just explained was a mitigation block, but they're very similar. For a mitigation block itself, and also what I mentioned previously, I mean, he looks for them in a consolidation, but listen, I'm gonna leave it at that. I mean, I'm more than happy with my explanation here. In fact, I'm gonna continue going through the content and continue just being patient with myself. Like, I don't know why it makes my blood boil when I don't understand everything, like some fucking know-it-all. But anyways, I'll leave it at that.